Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Wednesday, November 10th, 2010. This morning, we're talking about let the G20 games begin. We've got another G20 meeting starting tomorrow, which is later on today for us here in New York. Okay, where the global trade imbalances and currency valuations are going to be the major topic of conversation. Now, this is somewhat coincidental, or it's not really, but the timing couldn't be better because we get trade deficit and surplus numbers that came out this morning. Now, in the China, their trade surplus numbers increased. In the U.S., our trade deficit numbers actually decreased. That was a good thing. And in Canada, their trade numbers deficit decreased as well. That came about because of exports to the U.S., which were actually lower. But basically what we're going to see is that, we have this G20 meeting going on where all these leaders show up, and, we really start to see the politics behind the economics. Now, going into this meeting, China's done their usual. They've allowed its yuan to appreciate some, and it's now its highest level since the end of 1993. So, they go into these G20 meetings and say, well, look at us. We're letting the, yuan appreciate. But really what this is intended to do is to gain them more clout with the IMF, a little bit of some backroom deals going on there, where now they're going to have more clout and more say in what goes on in the IMF. Well, the reason why the yuan is now the strongest since 1993 is that nobody really remembers, or they don't look back to what happened on January 1st, 1994, when essentially the Chinese government allowed its currency to depreciate by 50% just by saying it, just saying we're going to keep a peg, and this is what the new peg is, and it's 50% lower. So that's really what's allowed them to go on this, massive run of economic prosperity. All right, everybody kind of forgets about that, and they say, well, the U.S. manipulates their currency, blah, blah, blah. You know what? If we take a look at history, and I'm going to talk about a little bit of recent history here going forward, but, for all the bad talk about what goes on in the U.S., these things have happened around the globe and have gone on for some time. So we've got the G20 meeting, tomorrow and the next day. We're going to see what comes out of it. But, as I mentioned before, because these meetings are non-binding, sometimes it's much ado about nothing. So some other news in the UK, pound is stronger. Well, actually, let's just take a look here. I want to look at the euro real quick. You can see the euro is selling off, broke 137.5, which was a little bit of near-term support. All right, in the eurozone, they've got problems going on with Irish yields. All right, they're at all-time highs right now, and it looks like the market's trying to push Ireland into default. You've got CPI figures in France came in as expected, but industrial manufacturing production figures came in a little bit lower than expected. Just want to look here at the pound. Pound is actually stronger. Here they came out with their quarterly inflation report, and it was actually, the tone was a bit hawkish. All right, inflation came in at 3.1%, which is outside the target band of 2%, and they said that's likely to continue throughout 2011. Well, because they've enacted these austerity measures, and I'm just kind of watching on the TV here as they're showing 50,000 rioting students in the UK protesting university cuts. All right, they're going to take, the BOE is going to take a wait-and-see approach to the economy there and see if recovery happens, or if they start to get lower inflation as a result of the austerity measures. So while they do have a decidedly more hawkish tone, they're not going to do anything as of yet. You can see the pound is giving back a little bit here, and it looks like we've actually flipped from a little bit of mild risk-taking to start the morning to risk aversion here. We've got the Aussie lower. All right, it's going to looks like it's coming back and going to retest parity here. Whoops. Where are we? Looks like I need to scroll over a little bit here. Looks like we're just above parity right here with Aussie and dollar. And lastly, I want to look at Japanese yen versus USD. We're at a 1-month low for yen versus dollar. Now, bond yields in the U.S. have been moving higher over the last couple of days, particularly in the 1 and 2 year denominations. And the reason that that's happening is because, well, it's twofold. One, the market thinks that this may be it for the Fed as far far as quantitative easing goes. So regardless of what happens to the economy, the most recent QE2 that is announced is going to be the end of it. All right, and the second thing is that the U.S. may need to start offering higher yields on its short-term debt because the markets are fearful of a declining dollar. So anyway, the dollar-yen pair, it's very sensitive to 1 and 2 year U.S. Treasury yields as this affects the interest rate differentials. So if we go back here, we can see that today we're on the 2-hour chart. We're at a 1-month low for yen versus dollar. So that's what's really happening here going into this G20. All right, some of the other things to be discussed besides the currency valuations and current account deficits, trade imbalances, are what can these smaller countries do about the hot money inflows that hit their countries. Smaller countries can't really do anything to defend their currency, and the question is whether or not they should. So I think we're going to see a push towards more global balance. But in the meantime, we have the dollar, which is still the driver of world markets. Now you've got Brazil; they're coming out and they're calling for a reduction in the U.S. dollar's impact as the world's reserve currency. They want it to go to a basket of currencies, but I got to tell you that neither the U.S. nor China wants to see that happen. That would mean that Chinese would actually have to allow their currency to float freely, which they are not likely to do. All right, and then also it means the U.S. has to give up some of its dominance. So that's not going to happen. Can't blame this guy for trying. But what strikes me the most is that you hear all this talk about what the Fed's doing, dollar manipulation, where exporting inflation around the globe. But you got to remember that over the last 20 years or so, all right, it's really been Fed policy and dollar expansion that's allowed all these economies to grow. I mean, it wasn't that long ago that they were still riding bicycles in China, but now they've had this unprecedented growth for the last 20 years. I mean, do you think they'd rather have, the last 20 years or the previous 20 years? Well, they're practically in the Stone Ages, and it wasn't that long ago that it seemed like every year Brazil was defaulting on whatever money they borrowed. They had massive hyperinflation. All right, now they're a stable, growing economy. So, you've got all these countries are turning around and saying, oh, the U.S. is bad and they're doing this, that, and the other thing. Well, let's take a look at recent history. And, you might think that, hey, maybe the U.S. wasn't that bad for you after all. So keeping an eye on this G20 meeting. We'll see if anything comes out of it as far as cooperation goes. I highly doubt it because I think the U.S., has this history in mind, and we sort of say, you don't like it, tough, do something about it. And nobody seems willing to step up and take the mantle, so to speak. So that's what I'm looking at today. Looks like we've got dollar strengthening here. Markets going into a little bit of risk aversion mode. We've got Euro debt crisis, particularly in Ireland, going on, which is going to keep the markets looking for that safe haven bid despite yen weakness. So anyway, I just want to mention also we got the webinar tomorrow morning, Day in the Life Pro Forex Trader. I'm going to show you how to prepare for the market trading day. Basically, where to look at, what to check out, the news, different price levels, things of that nature. So if you haven't signed up for it yet already, you can email me at mentor@fxedu.com. Just send me your contact info, name, telephone number, email address, and we'll get you signed up. It's going to be tomorrow, Thursday, November 11th at 8:30 a.m. Eastern Standard Time. So I hope to see you there, and good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.